What's up guys, I'm back again with another video, and today we're going to be talking about oil. That Texas tea, black gold, whatever you want to call it. The stuff that makes your internal combustion engines run and does a whole lot more that you probably don't even realize. Should you be buying the dip? Is it time to sell your positions? Or should you potentially be shorting it or buying puts? In this video, I'm going to go over what I'm doing to play the oil game right now. And if you like this type of video, please remember to hit like and subscribe. I appreciate all the feedback. You guys are awesome. And yeah, without more to say, let's get right into it. I'm sure you've noticed in the last few months the drastic increase in gas prices. Just the other day, crude oil hit a 13-year high, although it did sell off very fast. Since the beginning of December, the price of crude oil had nearly doubled and has since sold off a bit to about $95, $96 where we are today. Something that I think people have already forgotten about was the massive drop that occurred on April 20th, 2020. On that day, the front month May 2020 WTI crude contract dropped 306% or $55.90 for the session to settle at a negative $37.63 a barrel. So basically, they were paying you to take barrels of oil. They had nowhere to put these barrels, and they were literally paying $37 a barrel just to take it off their hands. Now, of course, this all had to do with COVID-19 and the whole world shutting down, drastically reducing the need for oil at the time, and which, to be honest, I don't think is going to happen again anytime soon. Personally, I still think oil is overbought, and we're going to come back down to reality. Now, by no means am I anti-oil, or do I think that oil is going to zero, or anything like that. In fact, I was one of the people defending oil for the last year and a half. Here's a partial list of all the things that oil makes. I'll do a quick scroll through. You can pause and read it if you like, but I bet you can find something on that list that you did not know was made from oil. Everything on this list needs some type of crude oil to be manufactured. The crazy price action in oil has caused some companies to also have crazy price actions. For example, we're looking at Chevron here, ticker symbol CVX, going from $93 to $172 in 6 months. If we look at the yearly chart, it's parabolic. Another ticker that's seen benefits from the rising prices is ERX. That is a bull 2x leveraged ETF. Went from a low of $20 in August to a high of $56 just a few days ago, almost tripling. And I believe there are a few reasons why the price of oil went up so high. Starting off with the main push for green energy and electric cars. I really think that may have discouraged a lot of people from investing in oil or certain companies from expanding their production, causing supply to slow down a bit. Then we had inflation driving up the price for basically everything. And now we have the Russia-Ukraine conflict, which is cutting off a source of oil. It doesn't really make sense. Just because we're not getting oil from Russia does not mean that there's less oil in the world and it's become more scarce all of a sudden. Other countries are still going to buy their oil from Russia for probably discounted prices. I think it's all just a bunch of hysteria. And personally, I've been buying puts for the last few days, and I'm very, very happy. So there are 3 stocks that I chose to short, or actually I just bought puts, are OXY, Occidental Petroleum, CVX, Chevron, ERX, the Direction Daily Energy Bull 2X ETF, and I've also started a small position in DRIP. So DRIP is the inverse of ERX. So this is an inverse 2x leveraged bear ETF for the S&P oil and gas section. So basically, when oil and gas goes down, this goes up. And we're at a super low price. Just the other day, we hit all-time lows of $2.70 a share. So if you think oil is going to drop and keep dropping, start picking up some DRIP. Personally, I'm just going for short calls. I'm just doing weekly calls and weekly puts. I'm not going long or going like super short. I'm not looking very far in the future. I think that the oil pop is gonna sell off a bit more than where we're at right now. And companies like CVX and OXY, and there are others like IMPP, but this one's already sold off quite a lot, so not much meat left on the bone here. There are a few others that were trending on stock twits, but they've already fallen quite a bit. So I'm looking at, like I said, OXY. And by the way, this is a great company. OXY is a good company. I had nothing against this company. Same thing with Chevron. I think Chevron's a good company. I mean, not necessarily morally or whatever, but I'm just seeing, I'm just looking at these charts like it's parabolic. What are the odds it goes back to the prices right before the invasion? It's usually when you see something go, this parabolic, it comes down just as fast and just as hard. So that's where I'm at. I don't think oil's going to zero or negative again, like I said before, but I do think we're going to see a sell-off. And by the way, it's not just oil. There are a whole bunch of other commodities that are going crazy right now. You have like nickel, copper, everything. Wheat right now is insane. If the crops don't make it out or if they get damaged due to the war, then that's just going to lower the supply. The demand's going to stay the same, and you know what that does. I have puts on oil. I'm not against oil in any way. I drive a gas car. But I really do think that push to green energy is going to still happen. I do think more and more people are going to have electric cars, and I think that there's no way to stop it. So yeah, guys, oil is not going anywhere. You saw that list. We need it for all those things. But personally, I feel like it's overpriced right now, and it's bound to go down. Let me know what you're doing with oil. Are you touching commodities? Are you shorting? Are you long? Let me know. Anyways, guys, hope you all have a great time trading and make tons of money. Stock Surfer, signing out.